advertising jobs, accounting jobs, HR, PR, even ER jobs, Soho jobs, Shoreditch jobs. Keep me away from the central line jobs. Banking jobs, building jobs, never ever boring jobs. Small jobs, big jobs, London Borough Market jobs, or even voiceover jobs, which is how I ended up recording this ad. Search millions of jobs on LinkedIn and find one meant for you.
They don't chant your name when you give blood, or sing songs about you. But patients and their families will remember you forever. Because your blood can change their lives. We need more blood donors in Tooting, the West End and Edgware. Bleed for London. Join us today at blood.co.uk.
There's something for everybody this Halloween at Aldi. Dead good sweets, decorations, face paints. Be afraid. Be very afraid to miss out on these shockingly low prices. In store now. Everybody get to Aldi for an amazing Halloween.
Halloween's back, alright.
Time is money. Or so money says. Well, money. I know you like to dictate every hour of every day, add to my to-do list and throw the odd spanner in the works. But not anymore. This is my business, and I run it on my watch. I'm in control now, money, and times are changing. Save time with instant business invoicing, now on the Barclays app. Search Barclays Business and make money work for you.
Must have a Barclays business account. T's and C's apply.
AB InBev shares plunge, wiping $14 billion off its market cap as the world's largest brewer misses profit estimates for the third quarter and warns tough market conditions will continue for the rest of 2019. Kering tops the Stock 600 after posting double-digit growth at its flagship luxury brand Gucci, defying fears of a sales hit from the unrest in Hong Kong. Barclays nears a one-year high as the lender beats third-quarter expectations thanks to a 67% jump in investment banking earnings. CEO Jess Staley telling this program economic and Brexit uncertainty will, though, make it tougher to achieve its targets.
Whilst there are some headwinds, we had a reasonably good quarter, and obviously the profitability is quite acceptable. But recognize, even with Brexit, we're still in a pretty benign credit market for the UK.
Sterling sinks but recovers ground as UK Prime Minister Boris Johnson says he'll allow more time for MPs to debate his Brexit deal if they back a December 12th general election.
We're being very, very reasonable. We're saying if you genuinely want more, you can have it. Here it is. But the condition for that is that we all agree to go for a general election on December the 12th.
Okay, let's have a look at the market. I mean, look, dare I say, 0.12 of 1% lower for the Euro Stock 600. Very flattish markets from the US overnight, apart from the Nasdaq, which was up 0.8%. But the movement underneath is amazing. It really is. Look at the individual sectors, and maybe that'll tell some of the story, but it's the stocks really that do. So retail, 1% higher. Autos, 0.6% higher. Construction materials. I mean, there's stories all the way through this as well. Of course, the luxury retailers, very interesting. Renault's out today. We've got Lafarge details as well. On the downside, I mean, we've got AB and InBev and their miss, and that's what's creating the best part of 3% difference between the best performing and the worst performing sector in Europe. But again, let's have a look at the individual stocks. Ubisoft, AB InBev, all these kind of companies. Look, there you go. AB InBev down 10.3%. United Internet in the middle down 17%. But Ubisoft 22% lower. I guess if they're late on their titles, they're going to miss a key part of the key holiday season, and that is vital for the sellers of these games. To the upside, Kering and Moncler. We've talked a lot about that this morning as well. The owner of Gucci and their rival Moncler both having good numbers. And it just shows you what an incredibly split sector luxury is at the moment. Top end still doing incredibly well. The middle luxury brands really beginning to, I mean, we've seen problems with the likes of Hugo Boss, haven't we? Yeah. But top end looks good still. And I would entreat our audience to stay with us. We've got a luxury phoner in just a few minutes from Hong Kong, so it'll be interesting to hear what the analyst has to say. US Vice President Mike Pence has accused Nike and the NBA of, quote,
kowtowing to China by muzzling criticism of the ruling Communist Party. It's the latest in an ongoing row over a tweet from Houston Rockets manager Daryl Morey supporting anti-government protesters in Hong Kong.
Nike promotes itself as a so-called social justice champion. But when it comes to Hong Kong, it prefers checking its social conscience at the door. Some of the NBA's biggest players and owners who routinely exercise their freedom to criticize this country lose their voices when it comes to the freedom and rights of the people of China. In siding with the Chinese Communist Party and silencing free speech, the NBA is acting like a wholly owned subsidiary of that authoritarian regime.
Mike Pence also repeated the use of violence against protesters in Hong Kong would make a trade deal harder to secure.
Unrest in Hong Kong has taken a toll on retail sales in the Chinese territory. But two luxury brands, Kering and Moncler, have managed to absorb the hit by making up for lost business in other parts of Asia. Shares in both companies are sharply higher. Gucci, which is Kering's jewel in the crown, picked up customers on China's mainland and South Korea, which contributed to a 10.7% jump in third quarter sales. On the phone is Luca Solca, who is Senior Research Analyst, Luxury Goods over at Bernstein. Thank you very much indeed for joining us today, Luca, as well. Well, just typify what we've been seeing in this season, because very interesting numbers also out from the likes of LVMH and Hermes as of late.
Yes, absolutely. What we see is that the brands that are at the top of consumers' minds and at the top of the consumers' desires are blowing through this issue in Hong Kong. And indeed, as you were anticipating, they're recapturing consumer demand elsewhere. Mainland Chinese consumers that are not coming to Hong Kong are buying in the mainland. They're buying elsewhere in Asia. And that has been a recurring trend that we've seen very clearly when looking at LVMH, Hermes, and more recently Kering and Moncler. What supports luxury goods sales is the very strong level in Chinese consumer confidence. We've seen it at a peak 3 months ago. It has deteriorated in the most recent 2 months very slightly. It remains very high, and that is typically the most important leading indicator as far as high-end luxury goods sales are concerned.
What's interesting about the statement you've made, Luca, is that the demand remains strong, but the location at which they're purchasing the product has just shifted, which I think tells us a very interesting story about what Hong Kong's future is going to look like, and two, about the resilience of demand from the Chinese consumer for luxury product at the moment. I wonder if you could just address those two issues.
Indeed, what we've seen is that many luxury goods brands in the most recent years, making the most of fiscal reform in mainland China, have realigned prices between Hong Kong and the rest of China. In the past, Hong Kong was cheaper, not anymore for most brands, so it doesn't make too much of a difference for the Chinese consumer to buy at home rather than buying here in Hong Kong when they so choose to come here. And I think indeed that the most important problem that we have today in Hong Kong as far as luxury retailing is concerned is that there's a significant drop in Chinese visitors, and that's why the stores are empty. I think that this indeed is also in sync with the broader desires of Chinese leadership representatives, as of course Chinese spend on luxury goods abroad fails to provide tax receipts to the government coffers, and more spend in the mainland is actually for the better. So indeed it does look like that while Hong Kong remains very important for luxury goods in general, counting between 5 and 10%, chances are of total sales globally, chances are that in the future its role is probably going to be less important as consumers choose to buy everywhere in the world. After all, we're looking at brands that have a global reach and can receive Chinese consumers in Hong Kong, in the mainland, in Europe, and everywhere else in the world they choose to go to.
In terms of pricing, Luca, the best in class is incredibly well priced. I'm just looking at Hermes' share price. They trade at 40 times forward as well. are the best in class, despite the good growth profile, despite what everything you just said about the Chinese consumer and their options as well, are they overpriced?
That's a very good question. And indeed, you could say that while looking at the historic multiples trajectory, and you would see that indeed that we are clearly above the long-term average. It will very much depend what happens to the broader macroeconomic backdrop, and it has been weakening, to be sure. So that is clearly one warning sign. The other thing is what happens to the international trade confrontation between the US and China. Was a deal going to be signed? If a deal was to be signed in the short term, this would clearly support macroeconomic trends, and it could also revive Chinese consumer confidence, which in the end is going to benefit the luxury goods sector in the first half of next year and could continue to propel even the best in class. The best in class would typically outperform in relative terms, and I think that is why Hermès has been soaring out of them, because they beat expectations. But in absolute terms, if we were to go into a slowdown, quite clearly the whole of the sector, including the best in class, would underperform in absolute terms.
Yeah, and Luca, just to wrap up, I think for our audience, just interested to know, beyond this company, Kering, what else do you like or dislike in the sector as a whole?
Well, there's an opportunity to hide in good quality and in relatively defensive names. I think that the EssilorLuxottica story, for example, as the synergies are extracted from the merger, could continue to provide upside to investors and value creation. That could also be a convenient place to hide from a macroeconomic slowdown. So there's a defensive element in that. I continue to like Moncler, that has retreated significantly in the most recent weeks. It normally does that during the soft trading season. I think that this is still a very seasonal name, and so fourth quarter and first quarter in the year are all that counts, and I think that they're going into the peak trading season with very strong momentum, as we've seen yesterday. And then the other option that one could have is to hide in what could potentially be self-help stories with the added value of a potential takeover floor. We look at high-quality hard luxury names in that respect, looking at Tiffany, for example, and even Richemont, that is potentially feeling the pressure from the difficulties in Hong Kong, but is also very deeply exposed to the mainland and in a good position to recapture demand elsewhere.
Luca, a pleasure having you on. Thanks very much for your time this morning. Luca Solka, Senior Research Analyst for Luxury Goods at Bernstein. Patrick, very briefly, is it a segment or sector that you're interested in playing?
We sold Kering in the spring, early summer, and we stuck with ABI InBev, actually, and we were thinking September was going to be a very difficult reporting season for the luxury companies, and the staples companies would probably see it through. So we've got that call long. So I think I'm actually surprised how resilient the high-end luxury companies, the sales have held up despite what's happening in Hong Kong, despite what's happening in the global economy in general. So that's I am surprised by the resilience and actually the very strong sales numbers coming through from this sector.
But you won't revisit, you still...
Oh no, we'll revisit, I think, because ABI, our case was, both of them were up 35% when we made the decision which one to keep, because both had gotten very expensive. We thought the ABI InBev would probably be more sustainable and not have the profit miss. The opposite's happened. You got the beat from Kering and you've got the miss from ABI, so we'll have to look at it today. It's still very expensive, all the luxury goods, so I don't know if we'll get back into them, but we may have to reassess the sustainability of ABI.
Okay, Patrick, thank you. The UK's FTSE 100 is on pace for the best weekly performance in 9 months. AstraZeneca helped lead the gain. Shares in the drug maker closed higher after the company raised its sales guidance for the second time this year, thanks to strong demand in China. Sales in the country rose by 40% over the period, while Astra's revenue overall increased to £6.4 billion on an annual basis. Juliana caught up with CEO Pascal Sorier for an exclusive interview following the earnings release. States. He told her AstraZeneca saw a solid performance throughout the business. Didn't obviously.
Now get greedy whenever you want.
Leaders as she hits the One Young World Summit.
I'm Paul, and I am a nurse educator for a pharmaceutical company. Started with working with Policy Genius to figure out what plan would work for me, and if it was true that I was paying too much. What I was paying, I thought was great for what I was getting, and then once I signed up with Policy Genius, I realized I'm getting more coverage for less. Working with Policy Genius, I saved about 20%. Not only did I save 20%, but I got extra coverage. It just feels like I could take a deep breath and sleep well at night.
Do you worry about going to the dentist? After all, a visit to the dentist can easily cost $2,000 or more. Well, relax. The Carefree Dental Card is now available in your area. Call now and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. Activate your card and you can start using it immediately. From exams and cleanings to more expensive procedures like crowns, dentures, even braces, they're all included with the Carefree Dental Card. Say you go to the dentist today without any card and your bill is, well, ouch. Wait a minute, let's try that again. You go to the dentist today and show your Carefree Dental Card, you save $525. The Carefree Dental Card is just $15.95 a month. So call now and make going to the dentist carefree.
Call 1-800-997-2117 to receive your free Carefree Dental Card information kit. Call 1-800-997-2117 now.
Anytime, any place. Watch CNBC Primetime live.
Yeah, baby!
Catch up on demand on the all-new CNBC app.
There's unbelievable technology here.
Easier than ever to find the shows you're looking for. Discover new ones.
This is amazing.
Wow. Go behind the scenes.
That's why I watch CNBC.
Plus, access to CNBC podcasts. Right now, 10-minute free preview every day. Now available in the App Store.
There's one show that every CEO and every decision maker knows is the most powerful business show in the country. The First Morning Analysis. Breaking news, politics, and global markets. It's the ultimate pre-market news show. Now in a new Times Square studio in the heart of New York City. Access, power, influence. Squawk Box. Weekdays 6 a.m. Eastern on CNBC.
Tonight is the closing ceremony for the One Young World Summit in London. The three-day event has brought together social entrepreneurs, business delegates, and a few famous faces, including Sir Bob Geldof, Sir Richard Branson, and the Duchess of Sussex, Meghan Markle, and Lady Tanya Breyer was there. Are you a lady or a dame, or what are you? You must have some...
Oh, I wish, Steve.
Have you not got any letters?
I haven't. You've got letters after you, OTT.
Very good comeback.
Like that, Jeff, thank you. And I want to hear some more of your singing later.
No, you don't. Believe me, you don't. Could have been the worst acronym. I'll take OTT.
I mean, OTT's not too bad.
Now, Tanya's been at the gathering and now joins us round the desk.
That's right. I was at the One Young World Summit yesterday.
Yes.
And
what is it?
So what it is, Steve, you have 2,000 young leaders from over 190 countries.
I'm sorry, how young is young?
So between 18 and 30.
So Greta Thunberg can't get in because she's too young?
She's too young. Yeah. You are just young enough. So you could make it. Jeff could be there too. And they come for 3 days and they are counselled by leaders from the business world, from the NGO world, from politics. And they talk about the issues that they're concerned about, including climate change and violent extremism. So I was there yesterday and I actually talked to the co-founders of One Young World. They're celebrating their 10th anniversary and the co-founders are David Jones and Kate Robertson.
It's the first time in human history that the youngest adults in the world are the most powerful. You know, they're the most responsible. They understand how to use the power of technology to drive change. And I think that's what gives them so much potential. And, you know, on the one hand, if you want to be a pessimist, it's quite sad the amount of inaction from the world's senior leaders. On the other hand, if you kind of say who's doing more than anyone in the world on climate, it's Greta Thunberg, a 16-year-old schoolgirl. Who led the way on gun control? Emma Gonzalez. Who led the way on education? Malala. So they're really, it's not that they will lead one day, they're leading now.
The Royal Albert Hall, thousands of people there, and then the Duchess of Sussex comes, gives you a big hug. What was that moment like for her to come in to the auditorium for you?
To see this amazing young woman coming back to One Young World for her third time, being so proud and so excited to be there, again was validation for all of the One Young World supporters, all of the One Young World delegates, that someone in such a very, very high-profile role was so excited and so pleased to be there. And I was absolutely thrilled for her, and I think she was thrilled to be there.
As a young leader herself, do you think she's been unfairly criticised?
Personally, I think it's appalling the way she's been treated, and I'm embarrassed and ashamed of the British press for having done it. She's an amazing person, passionately driven about empowering women and doing good in the world, and it was wonderful for us to have her back.
I put in there too.
So, of course, there they were talking about the appearance of Her Royal Highness the Duchess of Sussex at the Albert Hall on Tuesday night.
So they just had an ITV reporter, is it Tom Bradbury? Or someone following them around a trip to Africa.
That's
this
right.
is the Sussexes, Prince Harry and Meghan Markle. Oh, I should say the Duchess of Sussex.
Yeah.
And it's been a bit heartbreaking, apparently, for royalists. Apparently she's been wearing her heart on her sleeve, and he's been wearing his heart on his sleeve. And I haven't seen it myself, but
I saw it. I don't know if you saw it, Jeff, or if you saw it, but he followed them around, and it was at the time when they were being criticised by the press for various things, and Prince Harry announced that they were actually going to sue. So it all came out then, and I think what you saw in the documentary was the vulnerability. They showed that, and whether that's a good or a bad thing, critics are
Can I
on both sides.
ask you a question? I mean this honestly. I have no angle. Meghan Markle is a professional actress. Is she as vulnerable, do you think, or is it actually this is a professional actress playing to the camera?
Look, Steve, I think it's very hard to say. It's very hard to judge and to know what's going on inside someone, isn't it? None of us really know, do we? All I can say is that, funnily enough, I met her at a One Young World Summit in 2014, pre her becoming the Duchess of Sussex. And all I can say from that encounter was that she was as passionate about issues as she is now.
They got a lot of criticism for talking on that trip specifically, because it did feel like they were airing first world problems in a part of the world that suffers from so many more serious issues. Do you think that was fair criticism?
You know what, Jeff? I think, again, you could look at it from another side, couldn't you, and say, actually, they were shining a light on the problems where they were travelling, and what you saw was that helpful to the communities that they were trying to help.
And just on the event itself, it was very interesting hearing from the founders about some of their ambitions. In terms of its momentum and what it really achieves, is there any sense of push through to the policy level? Does it actually get the politicians to focus on any of these issues?
I think it does, Jeff, and I think because these young delegates are coming from 190 countries, and the reason why they actually come together is they've been activists in their communities. So what the One Young World organisers want is for them to take away actions from the summits and then to replicate them within their community so that there is change.
Excellent. Tanya, thank you so much for coming in.
Thank you so much.
Good to see you.
Lovely to hear your singing voice. Could I hear it again?
No, it's not good. It's not good. Steve's is better, I think.
We're off to karaoke later on.
Are you?
What was that Paul McCartney Frog's Chorus, was it? Was that what it was called? Moving swiftly on. Tanya, thanks again. Patrick, let's just pick up with you here and let's wrap up the programme this morning. And one of the things that you were saying off camera, which I think was interesting, is about the path to profitability, or the lack of path to profitability that we've seen for some of these tech IPOs recently. Are you shorting any of these businesses now? And maybe we could flag up, I don't know, Netflix, Twitter, some of these other companies.
We're actually not short them right now. We're short the Russell 1000 Growth, which is a subset. Those are a subset of them. But I think Uber, Lyft, Snap, Beyond Meats, it was the WeWork about to IPO as well. Basically, all these companies got billions and billions of market cap valuation. Netflix I'd put in that group as well, that had no real path to profitability, and I think the market's really starting to question the business model of these things and use traditional metrics to value them rather than price to sales, even though there was no path to profitability. So I think that part of the market's still at risk. I prefer the laggards in the market in the United States right now, and healthcare is a growth sector that's trading at a below market multiple. A lot of political risk with healthcare. The Democrats, all the candidates there, have very strong rhetoric that would have negative implications for healthcare, but rhetoric is stronger than policy. By the time a Democratic president, if it happens, I think the policy would be less than the rhetoric, and you still have the Republican-held Senate. So I think the risks for healthcare are overstated. They're trading at multiples below where they got to following the Clinton tweet in 2016 when she talked about price gouging and the healthcare sector really sold off. So there's growth there, and they're cheap, basically.
What about the M&A story in the sector as well? It's been a huge driver this century, some of the mega deals. They haven't necessarily come up with the goods, a lot of these mega deals as well. Is that something that's lurking at the back? And of course, that has two sides to it. One, you're great if you pick the prey, but if you pick the predator, then you're going to be under a lot of pressure.
We're actually in the larger cap companies, so that's a risk of what our investment strategy is if they pay up too much for a smaller cap company to improve their price, basically their pipeline. I think with their share prices being depressed right now, it mitigates that risk a little bit, that they won't want to issue shares at these depressed multiples. So I don't think it's a big risk right now. We own Bristol Myers Squibb, Roche, Novo Nordisk. Those are the companies that we like. They all have the biotech angle to their revenues and the sustainable cash flows from existing pharmaceuticals as well.
I think it's fascinating what you say about the perception of risk rather than real damage to the ability of these companies to make unusually large profits in the United States. As much as people complain in the US about the way the system works there, they seem very wedded to the idea of private healthcare.
Very well, a good 40 to 60%, I guess, depending on the poll, really much wedded to it. And it's very profitable for the healthcare companies. Maybe it's too profitable and there will be some regulation. I think the markets are pricing in very significant regulation and the risks that probably won't be as extreme as the risks anyway.
Just very briefly, we're near the end of October. Can we relax that we're past the month of crashes?
I don't know if we should be relaxing because multiples very stretched. The Santa Claus rally is what we're talking about next, I guess.
We'll wrap it up on that. That's for another day. Patrick, nice to see you. Thanks very much for coming in this Friday morning. Patrick Armstrong, CIO of Plurimi Investment Managers. From Steve, myself, and the rest of the Squawk Box team, thanks very much for tuning in. We'll see you Monday.
A lot of people treat their finances like their health.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its cymbals when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
I've always loved a kitchen experiment, especially smoothies. I've blended all sorts of mad combinations. Strawberry and charcoal, broccoli and chocolate. Not my best, that. But when I test blenders in the Witch Lab, it's not about flavour, it's about performance. Our tests use proper tough stuff, hard ice, strong veg, rough nuts. And the blenders that can hack it are the only ones we recommend for your kitchen.
Which tests harder so you can buy smarter. Visit which.co.uk.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Hey, you. Yes, you. We didn't make Nature Valley nut butter biscuits so you could just sit and munch them on the train. Not when there's a whole forest out here to explore. Isn't that right? Go get it!
Delicious whole grain biscuits with a real nut butter filling. Nature Valley Nut Butter Biscuits. Get out more.
This autumn, as the nights draw in, beat the cold with Now TV.
curl up with the latest blockbusters, including Bohemian Rhapsody and Hotel Mumbai. Plus, with over 40 new movies added each month, from Aquaman to How to Train Your Dragon 3, Now TV's got you covered, wherever you feel like watching. Get cozy with the latest and best movies for just $11.99 a month. Search Now TV today. 18 plus, month passes auto-renews unless cancelled. Terms apply.
Trick or treat!
Oh, sorry, this is a Vauxhall Network Q retailer.
But your sign says no tricks, just treats.
Well, yeah. Treats like a £1,000 deposit contribution on an approved used SUV at 9.9% APR representative.
I'm telling my mum.
Well, get her to hurry. Offer ends on November the 4th. And don't forget our 1-year warranty and roadside assist. No tricks, just treats. Search Network Q. Because buying a used car shouldn't be scary. Personal contract purchase, subject to status, T's and C's apply. 18 plus only, Vauxhall Finance.
Want to know what's happening in right now? The latest headlines are just a step away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Fox News Talk around the clock on TuneIn.
Stuck in traffic during the big game? With TuneIn Premium, you can listen to your favorite NFL team on the go. No TV required. Even during rush hour, you won't miss a single touchdown. Listen to the NFL on TuneIn Premium today.
Welcome to Street Signs. I'm Jemana Versace.
And I'm Juliana Tattlebaum. These are your headlines.
Barclays nears a one-year high as the lender beats third quarter expectations thanks to a 67% jump in investment banking earnings. But the CEO, Jess Daly, tells CNBC economic and Brexit uncertainty will make it tougher to achieve its targets.
Whilst there are some headwinds, we had a reasonably good quarter, and obviously the profitability is quite acceptable. But recognize, even with Brexit, we're still in a pretty benign credit market for the UK.
Hard to swallow. AB InBev shares plunge, wiping $14 billion off its market cap as the world's largest brewer misses third quarter profit estimates and warns tough market conditions will continue for the rest of 2019.
Kering shares surge after the luxury company posts double-digit growth at its flagship brand Gucci, defying fears of a sales slowdown from the unrest in Hong Kong.
Sterling sinks but recovers ground as UK Prime Minister Boris Johnson says he'll allow more time for MPs to debate his Brexit deal if they back a December 12th general election.
We're being very, very reasonable. We're saying if you genuinely want more time, you can have it. Here it is. But the condition for that is that we all agree to go for a general election on December the 12th.
All right, well, a very warm welcome to Street Signs and happy Friday. Let's kick off the show with some fresh... Happy Friday, Zhu. Let's kick off the show with some fresh German data. Yesterday, of course, we got those fresh October PMI numbers in. Now we've got the IFO survey coming through. And the IFO survey for October showed that German business morale was unchanged. And in terms of the numbers that have come through, the current conditions index came in at 97.8 in October versus a forecast of 98 flat. So slightly worse than expected. But the business climate index, this component of the survey, came in at 94.6, which was a touch above the expectation of 94.5. We've also seen a little bit of a revision to the September numbers. The current conditions index was revised to 98.6, and the expectations index for September revised to 90.9. And the message from Germany's IFO is that the economy is stabilizing. So very interesting that the numbers were actually suggesting a bit of stabilization rather than deterioration. And that's interesting given what we saw in the PMI numbers yesterday. Well, let's bring in Clemens Fuest, the president of the IFO Institute, for a little bit more on this survey and the latest numbers. Thank you very much for joining us, sir. So it looks as though some signs of stabilization coming true. Have we hit the bottom in Germany?
We do see a stabilization. Yes, good morning. We do see a stabilization, and what's interesting here is that we're finally seeing an improvement in manufacturing, which is a key sector for the German economy. What we don't know is whether this is really a turnaround. It's too early for that, but we do see a stabilization, and that's a very good sign. This is also consistent with forecasts for Germany for next year, which say the growth rate will be something like 1%. And to achieve that, we need this stabilization, and here it seems to be.
So potentially a bit of a green shoot coming through, but yesterday we got the PMIs, the flash numbers for October, which of course are considered forward-looking indicators, and that showed that the employment picture is actually weakening in Germany. So how do you reconcile that data with what you're seeing in the survey results today?
Well, we simply see different results. The IFO index is based on 10,000 answers from German companies, so it's much broader than the PMI. Of course, the assessment of the current situation continues to be falling, even if it's not falling as quickly as before. So what we see is indicators with different signals here, but I think it's solid. It's the second month now that we're seeing stabilization, so I think there is a stabilization going on. It is true that some companies have announced reductions in employment, and within industry, employment is shrinking, but in the services sector, in construction, the picture is very different.
And sir, digging a little bit deeper into your survey, you have a traffic lights indicator, that's what it's called, that talks about the probability of an expansion or a recession. What is that traffic lights indicator showing right now as the probability of a recession in Germany?
The probability of a recession is declining somewhat. We are still in the red, but it's improving. So that the probability of economic expansion is still very low. It's at about 30%, but it has improved, and I would say that's consistent with a certain stabilization, and not yet with a solid turnaround.
Interesting. So it looks like there has been some stabilization, even some positive signs emerging from the manufacturing sector. Would you say that we're edging towards a situation whereby your forecast may be at the risk of an upgrade in the future if this momentum continues?
It would have to continue strongly. I think we are currently in line with the forecast. I mean, to get those, to get a positive growth rate in the fourth quarter in Germany and a positive growth next year, we do need to see a stabilization here. If the IFO index had continued to fall, that would have questioned the forecast. I don't think we're moving towards an upgrade of that forecast. That's too early.
What do you think this means for the possibility of more aggressive fiscal spending from Germany? Because the view seems to be that the pain threshold hasn't been quite high enough to trigger a change in attitude towards spending more. And it sounds like this data certainly works against the German government on that basis.
We shouldn't forget that there is fiscal expansion in Germany. The current government has spent significantly more. So we do see fiscal expansion in Germany. And what we don't need here, the numbers are very clear. There is no indication of a massive fiscal stimulus. This is not justified. But what we're seeing also, if we think about monetary policy, it seems that this massive stimulus, LTRO bond buying, further cutting interest rates into the negative. It's a bit like using a sledgehammer to crack a nut here.
All right, so Mr. Fuß, thank you very much for weighing in and giving us that detail around those numbers. Clemens Fuß, president of the IFO Institute.
All right, let's talk about some corporate earnings. Barclays shares are nearing a one-year high after the lender beat third-quarter profit estimates, boosted by its investment banking unit, which posted a 67% rise in earnings. The British bank reported a £1.4 billion charge linked to the payment protection insurance scandal, PPI. And Barclays also warned that meeting its profit targets for next year will be tough. Now, speaking to CNBC, the CEO, Jes Staley, outlined the concerns facing the bank.
PBT, profit before tax, of £1.8 billion, up some 16%. A return on tangible equity or return on capital of double digits at 10.2%. This is the sixth out of the last 7 quarters where our profit level is over 9% of capital, and a good capital print as well at 13.4% is our CET1 ratio. So it's a good quarter. We faced some headwinds in the UK and our consumer and and small business bank, but I think it held up reasonably well. Then obviously had quite a strong year-over-year performance in our investment bank. And our corporate and investment bank was up some 18%. So that was strong as well.
Yeah, just and I just wanted to dwell on the FICC income for a moment here, because that's been an area of, I think, some concern as investors have looked at banks in this space over the last 12 months. But up 19% looks very respectable. Could you talk a little bit about what that tells us then about underlying market behavior and investor behavior over the third quarter, and whether that represents some form of turning point as we look towards year end and early 2020?
I think the third quarter for the markets business was overall reasonable. Many of the markets still have very low volatility, such as certain parts of the foreign exchange market. Overall, on a dollar basis, the U.S. investment banks markets business were up roughly 6%, as were we. So again, we stayed in line with the U.S. banks. We did particularly well in the fixed income and the credit space. So it was a good quarter, all things considered, for us. But we do look forward to a little bit more volatility in the markets down the road.
Yes, good morning to you. Look, I've just been drawn to this very robust, but not as good as the third quarter last year, return on tangible equity from Barclays UK as well, way outperforming the CIB and Barclays International. Can I assume from this that Brexit is a little bit of a red herring if you're turning in between 17 and 19% ROTE from your UK business?
For sure, it's still a very profitable business for us. We have a strong UK credit card business, which delivers strong returns, and impairments have been reasonably manageable. We were able to actually slightly improve our net interest margin up to 310 basis points. We increased our balances in our mortgage portfolio. So whilst there are some headwinds, we had a reasonably good quarter, and obviously the profitability is quite acceptable. But recognize, even with Brexit, we're still in a pretty benign credit market for the UK. And we have a very high beta exposure to the UK economy and need to keep our eye on it. We have been quite prudent in our extension of unsecured consumer lending, but we like the profitability that we've been able to generate.
In other corporate news, AB InBev has cut its full-year guidance for core earnings, saying it will face additional headwinds in the fourth quarter. It comes as the world's largest beer maker posted third-quarter core profit that missed expectations due to a decline in beer shipments into China and rising costs.
And unrest in Hong Kong has taken a toll on retail sales in the Chinese territory, but two luxury brands, Kering and Moncler, have managed to absorb the hit by making up for lost businesses in other parts of Asia. Gucci, which is Kering's jewel in the crown, picked up customers on China's mainland and South Korea, which contributed to a 10.7% jump in third-quarter sales. Meanwhile, Italian jacket maker Moncler beat revenue expectations for the period, overcoming a 40% sales decline in Hong Kong.
WPP has reported its first quarterly sales growth in over a year, thanks to new contracts with the likes of Mondelez and eBay. But the world's largest advertising group said it expects sales and operating margins to fall for the full year, citing twists and turns ahead. Now, French rival Publicis cut its sales target for the second time this year, just a few weeks ago, warning about falling demand by U.S. clients.
And right at the bottom of the Stoxx 600, Ubisoft has slashed its profit targets for this year and next, citing a sharp downward revision in sales expected from two of its new video game releases. The French game maker now sees operating income at between 20 to 50 million euros, a far cry from its previous forecast of 480 million euros. The company, known for its Assassin's Creed franchise, also pushed back the launch of its blockbuster games until its next fiscal year. That stock is down about 22% today. Huge slashing of the guidance there.
A major share price reaction. Well, we're going to take a short break, but coming up on the show, it's all about monetary policy. Mario Draghi calls for fiscal stimulus as he holds his final press conference as ECB president.
There There's golf. And there's the golf lifestyle.
London, switch to Vodafone, the UK's best mobile network, and V Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
The world's longest wedding dress was longer than the Grand National Racecourse. Think that's big? Tonight, the Euro Millions jackpot is a colossal £52 million. 52 million! Now that's big!
Euro Millions from the National Lottery. Amazing starts here.
Estimated jackpot rules and procedures apply. Players must be 16 or over.
The 1304 LNER train, Coach C. Taking aunties with cold hands to nephews with warm cheeks in Edinburgh. Remorseful revellers back to their beds in Leeds. Business mums gliding over the Forth Bridge towards adoring toddlers in Newcastle. And a band heading to London to our group of strangers in a tiny pub. This is us. These are our journeys. This is our LNER.
What can you get from Tesco for £1 each this Halloween?
A pumpkin.
More.
A spooky pumpkin cup.
More.
Ghostly balloons. Spine-tingling spider webs. Ghoulish plates and napkins.
More. Yes, it is scary what you can get for just £1 each this Halloween.
Tesco. Every little helps. Available in selected larger stores.
With the new Halifax Family Boost mortgage, children can get help to buy their first home, and mum and dad earn interest on their savings. Everyone's a winner. The new Halifax Family Boost mortgage. Halifax makes it happen.
Your home and savings could be at risk if mortgage repayments are not maintained. Only available in England and Wales. One applicant must hold a Halifax Reward or Ultimate Reward current account. Conditions and exclusions apply.
Be part of the Perfume Shop's exclusive Buy One, Get the Second Half Price gifting weekend. Buy any perfume in-store or online and you'll get the second half price. Thinking of a present? Think the Perfume Shop for the ultimate finishing touch. Offer ends Sunday the 27th of October. Visit theperfumeshop.com for more details.
Hey, it's me again, the TV. Since my family gave me Now TV, there's no more endlessly searching for something they want to watch, because now I don't do filler TV, just killer TV. If my family want reality TV, I can fill that island-shaped hole. Football? How about the Premier League? Or how about dramas? I've got all the big shows from Sky Atlantic. Now they can watch whatever they're in the mood for.
What's your TV got for you tonight? Now TV. 18 plus, month passes auto-renew, terms apply.
Welcome back to Street Signs. Well, a quick check on how European markets are faring. We had Asian equities treading on water. The handover is pretty mixed, as you can see behind me. FTSE 100 down about 0.25 percentage points. The latest developments obviously being that Boris Johnson has put forward the proposal for a December 12th election. So all eyes on that, the political developments there. And it certainly stalled some of the rebound that we had in the currency. We'll talk more about that with Willem in a short while. Xetra DAX in Germany down about 0.1 percentage point. As I mentioned a little bit earlier, we were focused on the IFO data that came out showing some stabilization. But today is also very heavy earnings day. We've got retail up at the top, up 0.7 percentage points. Autos also leading some of the gains this morning. At the bottom, food and beverages down 1.7%. One name in particular we're focused on there, AB InBev, is down about 8% this morning. The beer maker posted disappointing results. Tech also coming under pressure, as well as some of the names that we've been focused on. Ubisoft, the video game maker, also down about 20%. So really it's a day of earnings rather than some of the macro narrative stories that are playing out. But again, all eyes really on the UK political developments over the next couple of days as well. Juliana.
Thanks very much for that market update, Shimana. Well, the ECB's Mario Draghi used his final press conference yesterday as president to call on Eurozone countries to boost spending in order to support growth. Speaking after the central bank kept policy unchanged, Draghi said looser purse strings will help bolster the ECB's accommodative policy stance.
Regarding fiscal policies, the mildly expansionary euro area fiscal stance is currently providing some support to economic activity. In view of the weakening economic outlook and the continued prominence of downside risks, governments with fiscal space should act in an effective and timely manner.
Draghi also defended the ECB's use of negative interest rates.
The overall assessment of negative rates is generally positive. For us, it's very positive. It's been a very positive experience. Negative rates have stimulated the economy, have affected positively employment, and so all in all, we're exactly in the direction we wanted them to be.
Well, let's bring in Christoph Rieger, Head of Rates and Credit Research at Commerzbank. Christoph, thanks for joining us today. Now, this morning we got some fresh numbers out of Germany in the form of the IFO survey, which actually showed some signs of stabilization in the German economy. And we've seen a pretty strong reaction in the euro. It's rebounding this morning, up about 0.1%. And this, of course, comes after yesterday's ECB meeting where Mario Draghi defended the use of negative rates, among other things. What do you make of this data out of Germany? Does this give you signs of hope, or does this give you optimism around the trajectory for the Eurozone?
Well, to be sure, we're still at very low levels, close to the lowest levels in 9 years. So it is a welcome stabilization, but the broader picture, with especially German manufacturing already being in quite a deep recession, does not change, and hence the pressure on the ECB also to provide more accommodation, besides, of course, the countries whose fiscal space, clearly Draghi refers to Germany, will stay high, even though no changes are expected short term, but next year this topic will definitely be coming back to the markets.
Christoph, let's talk about some of the ECB monetary policy measures. We know that quantitative easing is actually going to commence. The asset purchases program starts on November the 1st. Do you think that the bond markets are fully priced for the commencement of that implementation, or could we see some risks either way once they actually start and a little bit more detail is released on how they will be buying and spreading those bond purchases?
Yes, that will actually be very interesting next week when these measures will be rolled out. Actually, from Wednesday, with settlement T+2, we should start seeing the ECB with new net asset purchases in the secondary market, perhaps even a bit earlier in primary with longer settlement dates. So that will be interesting. Given the very low run rate that the ECB has, however, we don't expect large movements, especially in the public sector program. More implications could be seen in the private, especially the corporate bond program, where the supply-demand balance is different, and especially the gross volumes that the ECB will be buying will be quite significant.
Are you surprised that the interest rate market is not pricing in any further rate cuts out of the ECB? Also surprising on the back of introducing this tiering mechanism, which certainly gives them the cover to cut interest rates more if they had to. So why has the market taken a different read from it?
Yeah, you're absolutely right. That, I think, is the other very interesting thing next week, because tiering will go live on Wednesday. And besides the few basis points that we may see in terms of repo or money market impact, I think the bigger story here is really whether tiering does work as intended from the ECB. And this would mean that actually rate cut speculation could come back to a larger degree, because that would signal that the ECB could cut rates further if needed. But right now, I think we're just faced with a situation where risk sentiment in general is recovering. If you think of hard Brexit risk, if you think of the trade conflict, and now the data that we have also out of Germany, not as bad. So this is why the market is reducing rate cut speculation. And the other, I think, very important factor here is the deep rift in the governing council, with the opposition against the last measures already being very vocal. And when Madame Lagarde comes in at the next meeting, she will be keen not to deepen that rift, and hence probably also sound more compromising. And this means not as dovish or ready to roll out new measures to cut rates further immediately because of this opposition.
Christoph, a lot of the pushback, a lot of the opposition to negative rates and further accommodative policy centers around what this has meant for profitability for banks. And as a result, as a way to try to combat this, we've seen a lot of cost-cutting efforts from the European banks. But do they really have a lot to show for it?
Well, margins do remain under pressure, but this is not just related to the negative rates policy. And also the tiering will not make a big difference. If you look at net interest margins from European banks, they have been fairly stable at low levels for quite some time. And the bigger, I think,